This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by ATT Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. Before we get on with our podcast this week, I wanted to take a moment to tell you about a recent development. We have recently completed development of a mobile app. We call it our Mobile Investing Companion app. Its name is called the Best Stocks to Buy Plus. We put quite a bit of thought into this app. I wanted it to be something that would truly bring you value. This is not a mobile app that just presents you pictures of stock charts with a long list of numbers. This app will in one place present to you timely information to make you a better investor. The app uploads our latest podcast episode for easy listening, has investing lessons, market news, expert interviews, videos, additional stock ideas, along with the ability for you to easily text me any questions you may have. The app is free with plenty of features and also has a premium option that unlocks even more value. Think about this. You can have access to free, valuable information in your hip pocket. Yet, you have a burning question? With our monthly premium subscription, you can reach out to me directly and receive attractive stock tips driven by an algorithm based on the conditions of now. This is a one-of-a-kind investing app that we developed ourselves, not available anywhere else. We're excited because we've received feedback that it's a great app. It would mean a lot to me if you checked it out for yourself. Download it today, share it with others. Just go to our website for the download link on your mobile device at www.connermg.com. That's CONNERMG.com. Hi, everyone. This is Mathis Connor with ATT Management Group, and this is the Best Stocks to Buy podcast. Today is Sunday, July 22nd, 2018, and this week we'll be looking at the best dividend stock to buy right now. On our first slide, it's called the Setup and the Approach. The key objective of this podcast is to present to you a high probability upside potential stock. Now, a key tool we use is a financial model, a proprietary tool that we developed that uses multiple valuation approaches across over 6,000 stocks that we review every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but simply based on the best investment opportunity we can find and present to you. Now, an easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, we truly view creating such a model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a banker. So, my approach did not come overnight. I painstakingly reviewed over 40 years of white papers, take away the best each had to offer, and then added some of my own tested intuition that implemented new data sets that weren't even available as little as 10 years ago. And furthermore, the model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering is that the views are based on today. An unforeseen economic report, a regional conflict, or revised policy can change these expectations tomorrow. Benefit of using a professional manager like ATT Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. And now, so what did our model find for you this week? It turns out that this stock is in the telecom services industry. Here's the industry overview. The telecom services industry is comprised primarily of North American public companies serving the public in the areas of voice and increasingly data communication. Here are the 10 largest competitors by market cap, just to kind of give you how to level set. Are Verizon, AT&T, Vodafone Group, T-Mobile, BCE, Corning, Sprint, and TELUS. The leading growth drivers in this industry are industry merger and acquisition activities going on, continued growth of data-related services, and upcoming development of 5G high-speed data services. The challenges: continued decline in voice-related data services, regulatory challenges related to the proposed mergers and acquisitions, and price competition as wireless has become more of a commodity product. So, what stock did we find? What best dividend stock did we find for you this week? The name of the company we think is pretty well known. It's called AT&T Incorporated. Their ticker symbol is T, and we see the 6-month upside potential at greater than 30%. Additionally, the company has a very strong dividend yield of 6.1%. On to the quick facts slide. Here's a business summary description of AT&T. AT&T, formerly SBC Communications, is one of the world's largest telecom holding companies and is the largest in the United States. Its traditional, this applies to SBC, wireline subsidiaries provide services in 13 states, including California, Texas, Illinois, Michigan, Ohio, Missouri, Connecticut, Indiana, Wisconsin, Oklahoma, Kansas, Arkansas, and Nevada. And AT&T also owns AT&T Wireless, which was previously Singular, and they acquired AT&T Corporation, acquired by SBC Communications. In November 2005, they acquired Bell South. In December 2006, and DirecTV in July 2015. The company is headquartered in Dallas, Texas. They were founded in 1983, and they have 249,240 employees. Their website is www.att.com. On to the metrics slides. Over the last 12 months, the company's revenue was $159.2 billion. So this is a very, very large company. The net income of the last 12 months was $30.6 billion, and their cash from operations over the last 12 months was $39.2 billion. The operating margins in 2017 were 14.8%. On to the valuation metrics. The trailing PE ratio right now for AT&T is 10.3, and the forward PE ratio is 9.5, which implies earnings are expected to increase. The PEG ratio is at 1.8. It's a little greater than 1, which is ideal. The price to sales ratio is at 1.5. The price to book ratio is at 1.3, and the enterprise value to EBITDA ratio is at 7.0. So the valuation metrics are definitely not on the high side for AT&T. And as mentioned earlier, the dividend yield is very healthy right now, stands at 6.1%. And the average dividend payout ratio over the last 3 years was 66%. That means that AT&T on average pays out 66% of its earnings as a dividend. On to the next slide is a price chart of AT&T, and the company has been a bit volatile over the last year. It's been as high as around $39 to its low right now of around $32. The reasons for the volatility is the stock price has been volatile over the past year due to speculation about regulatory intervention of AT&T's planned acquisition of Time Warner, and there's been additional pullback due to a miss in the first quarter earnings estimates of 2018. On to the next slide. It's called Looking Back and Looking Forward. Looking back, the Justice Department sued to block the merger of AT&T with Time Warner, arguing that the merger would lead to higher prices for consumers. Looking back, the company missed first quarter 2018 earnings estimates due to soft wireless pricing and further losses through legacy wireline and satellite TV businesses. The company has been making strides on the rollout of its streaming service called DirecTV Now. Looking forward for AT&T. Recently, in June 2018, a judge ruled that AT&T Time Warner merger could proceed, although the Justice Department will appeal the decision. The merger is expected for the company to enable the development of a video streaming platform that will allow it to compete with Amazon, Facebook, Google, and Netflix. Also looking forward, the company will soon roll out its high-speed mobile 5G service. On to the next slide, the why down, the bull rationale for AT&T. Just a few, although significant. The company is expected to increase sales and revenues per share over the next 2 years. And also, this is attractive investment because of its low valuation metrics. The valuation metrics for AT&T are low right now, and they're expected to be low in the near future. On to the summary slide. The financial statement quality of AT&T is excellent. The net profit trend is improving. And also, as mentioned, the price pattern trend is negative, though we believe that this is temporary. We believe the company is very cheap right now, and we don't see it declining much further. The industry outlook is positive. Overall market outlook right now is positive. The recent closing price for AT&T was $31.10, and our 6-month price target is $44, which gives the company a 6-month upside potential of greater than 30%. And this, combined with its already very healthy dividend yield, is why we believe that AT&T is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hello, everyone. This broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high-growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we develop some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg, that's CONNERMG.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now, this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and would like to receive more timely investment information and be able to post questions, just send me a message to Ask to Join our LinkedIn group. If you rarely find my profile on LinkedIn, it's Mathis Connor. That's MathisConner. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.